This episode of My Two Satoshis is brought to you by Archer Tax Group. If, like me, you've incurred losses in 2018's crypto bear market, you need to contact Drew Karnowski for professional cryptocurrency tax consulting. Archer Tax Group can help you get the most from your losses from 2018. So visit archertaxgroup.com and schedule an appointment today. Mention Crypto Blood and receive 10% off of your tax planning services for any individual or business. Archer Tax Group, your crypto tax consultant. Yeah, it's your boy Crypto Blood, and welcome to another episode of My Two Satoshis. It is March 19th, 2019. Shout out to my man, Joni Tiedemann. He is hilarious. He's always trolling me on YouTube. Wanted me to play Professor J, Niamini, I think that's how you say it, a Tanzania group, hip-hop group. I like this, man. I've never heard of this person, but it's definitely hot, man. So I appreciate the song request. I'll be bumping this in the future for sure. Let me know what Niamini means, though, so I know what I'm saying when I'm riding around. It's your boy Crypto Blood. What's going on, people? Welcome to another episode. Today, we are going to be looking at a new report that's out, and it shows that there are 43 vulnerabilities in digital asset platforms. This group called HackerOne, it's actually like a platform, right, where companies can post bounties to, kind of help tighten up on their security. So we're going to look at a few of these vulnerabilities. They're ranging from companies like Coinbase over to Block One, that's, if you don't know, EOS, and even exchanges, decentralized exchanges, and even projects like Tendermint. So we're going to look at what this is all about, and also I'm going to sneak in there today a little bit about what's going on with Ethereum and its upgrade, soon to be ASIC resistance upgrade. Is this a good thing? Is it not? It really doesn't matter in the long run, right? Because we're switching from Ethereum is moving from proof of work to proof of stake. So ASICs or miners won't even be used in the future, but we'll take a quick peek at that as well. The second article is something that really I didn't even know until Max Kaiser brought it up when I had him on my show a couple of weeks ago about Abra and how they're utilizing Bitcoin. And when I saw this article, I failed to kind of mention what Max was talking about in regards to how Bitcoin is being used over at Abra. This honestly is probably the only factor that will make Bitcoin go up in the near future. I'm gonna be honest with you. I don't see anything else. All the buzz around using it for, coffee and all of that. It's just not a realistic scenario. But this is. So we're gonna take a look at, if you guys didn't see the Max Kaiser interview, they're not really interviews, they're kicking it sessions. That's what I call them. Check it out if you haven't. He talks about how this company Abra wallet uses Bitcoin, and this article will go over that as well. Very innovative way of doing things, and this really, guys, I'm telling you, if this catches fire, it will be a huge demand for Bitcoin to be used in this form. So we'll take a look at that in a second as well. Let's take a look at that market cap though really quickly. We're currently at $140 billion. Bitcoin's dominance is at 50%. And again, we're still teetering right there below that $142 billion area we have to breach from a market cap perspective. And if we take a look at the actual Bitcoin price here, you will see that we're not really making too much progress at the moment. I mean, you can see here we're making lower highs. Is that a consolidation, for a breakout? Possibly. Could be a breakout to the upside. Okay, so we're just kind of watching that for now. Again, I told you guys yesterday, and I've told you for a while, this area is the area we need to keep an eye out on. So if you're riding down the street or doing something else and you glance at your phone, you see we're above 42.5, let's just say 42.50 in Bitcoin, that we're probably taking another move up from here. So just keep that, maybe put an alert on your phone or something to notify you if that happens. First article out of You Today, it's about that Abra wallet and how they're utilizing Bitcoin. And again, this is really something I never even thought about, using Bitcoin as a settlement layer. So we're going to take a look at this article. It talks about several days ago, the 2019 MIT Bitcoin Expo event took place where the head of the Abra wallet, Bill Barheit, explained to the audience how the crypto app works and how it can ensure a real use case for Bitcoin and other cryptocurrencies at the moment. He says that Bitcoin serves as a collateral for traditional assets. In an article written by Forbes, Abra Wallet is described as a smartphone app that enables ordinary investors to link Bitcoin's value to a great number of traditional assets, such as the USD rate or major corporations' shares through their smartphones. The app's CEO reckons that Abra is the only market player at the moment that offers an actual way for Bitcoin to be used in the current economy, collateralizing physical and other hard assets in order to conduct banking operations. Until society widely accepts crypto for actual payments on a daily basis, Barheit believes using Bitcoin as collateral seems to be the only way to use it. Still, he adds, the world does not have enough Bitcoin to collateralize all available assets. So these are pictures of the CEO of Abra explaining how the system works with the multi-sig smart contract. Barheit is positive that soon many other crypto startups will also start proposing such services. Abra has been offering this service since the fall of 2018. Wallet users can also buy assets in parts using their crypto, thus investing Bitcoin into stable market instruments. As a small reminder, Abra is not a custodial wallet. Users' crypto is stored on a multi-signature address. The wallet CEO announced that soon enough the app is going to implement Lightning Network for faster payments, rather than simply allowing its clients to store crypto and invest in conventional market tools. Apart from Bitcoin, the wallet supports Ethereum, that's the native integration, BCH, and Litecoin. So again, this doesn't really go into it that much, but it Max Kaiser went through it a little bit more in detail on my show, and even on his show, one of his episodes where he interviewed the CEO of Abra. This is big, and I don't know how I missed this. They've been doing this for about a year now, and I wonder why they have not patented this method. You can patent methods. Why they haven't patented this, or have they? I don't know, but this is a very good use case for Bitcoin. Okay, it's a way for you to collateralize stocks. Like you can have people buy Apple stocks, partially buy Apple stock, and it's collateralized by Bitcoin, or backed kind of by Bitcoin. This opens up the door for individuals to buy stocks that are in third world countries. So it just opens up the possibilities for a lot of things. And I can even see other cryptos starting to be collateralized against assets as well. What do you guys think about this? This is what I'm talking about as far as the use case for Bitcoin. Not to buy a cup of coffee. Yeah, you'll have those types of fringe activities going on, but in general, I can see this being a very huge push on demand for Bitcoin. As the CEO said, there isn't enough Bitcoin around to collateralize everything. How do we know? That's just going to push price up the yield curve for Bitcoin. So I think there is enough Bitcoin for that. It's just that it would you would need less and less Bitcoin as the price of Bitcoin goes up and the demand for Bitcoin heads up to collateralize these types of instruments. You guys let me know your thoughts about this. I thought this was a very neat article that talks about this. And did you guys know Abra was doing this? I had no clue until Max was on my show and talking about it. Let me know your thoughts in the comments below. The second article is out of CryptoVest. HackerOne reports 43 vulnerabilities in digital asset platforms. It says here several bugs and vulnerabilities affecting 43 digital asset projects were reported recently by the HackerOne platform. HackerOne platform is for disclosing and publishing various software vulnerabilities, has found up to 43 digital asset projects that have various levels of vulnerabilities. Crypto-related projects have seen vulnerabilities reported in the past, but HackerOne submissions still remain active. An overview of the report flaws and bugs shows that large-scale projects like Coinbase, EOS, Tezos, Brave, and Monero are still open to vulnerabilities. The HackerOne bug bounty for Coinbase shows there are 12 critical vulnerabilities in scope right now. Block One has, which is the EOS creator, has 4 critical vulnerabilities in scope, uncovering various flaws in the EOS protocol. Digital asset projects, especially complex ones like exchanges or the new delegated proof-of-stake networks, are often vulnerable due to the fast launch, relying on HackerOne bounties to find flaws. The flaw reports also include Tendermint, a project aiming to help Binance launch its decentralized exchange. EOS remains the blockchain company with the most money spent on bug reports, as much as $500,000. For other projects and assets, the exact nature of the bugs is undisclosed, but based on payments, they are relatively minor. For crypto asset projects, the ability to create coins without limitation or to exploit smart contracts has been one of the biggest sources of concern. Tron has spent only $78,000 on bug detection, a relatively small amount, showing the project has few and minor flaws. Other report pages hide the sum spent in total, but for most digital asset projects and startups, a bug bounty program is the most accessible way to launch with some chance of bug discovery, yet without taking too much time to ensure a bug-free code. The underdeveloped nature of crypto startups is one factor that is limiting mainstream adoption. The various vulnerabilities of smart contracts and tokens are a concern when it comes to inviting mainstream attention. Yeah, so that's interesting to see. Like Coinbase hasn't even paid any bounties for the 12 that are open for them. That's pretty interesting. I don't know. What do you guys think? Do you think that they just feel like those 12 vulnerabilities aren't that big of a deal? I would never, I would try to plug any and every vulnerability I could find. And the last little article I wanted to sneak in there today for you guys was about Ethereum and their transition to an ASIC resistant network. And I told you guys about this upgrade called ProgPile before, as I covered the mainnet upgrade to Ethereum that happened last month or earlier this month. But yeah, I just wanted to give you guys an update on this. It says here, Ethereum has once again signaled its readiness to move to an anti-ASIC mining algorithm, the long promised ProgPile. In their latest meeting, Ethereum developers pointed to their general approval of the move without setting a certain date. Back in January, Ethereum showed readiness to disable the newly arrived ASICs and give a chance to loyal GPU miners. But the idea was put on hold for a while. Now the change in mining is looming as the community is in support of a more democratic form of mining. Greg Colvin from the Ethereum core developer team said, "We're going back to stuff we were tired of talking about months ago. We decided that the only issue is whether there were errors in the algorithm, backdoors in the algorithm, anything like that. Not arguments between the GPU people and the ASIC people. That will unroll over time," he says. The risk of an anti-ASIC decision is that the price of ETH could be lowered as the network becomes unattractive to miners. This is very true. You guys this is why I wanted to highlight this. And I was going to actually mention that, but the article mentions that. The recent Constantinople hard fork, which lowered the block reward from 3 ETH to 2 ETH, also led to a drop of around 30% in mining, though I think that was that particular aspect of the Constantinople hard fork actually boosted the price of Ethereum, because in theory supply shrinks when we have a mining reward reduced by a third. Abandoning ASIC mining is also seen as a vulnerability. In theory, programmable chips may become specialized very fast to new types of mining algorithms. This would leave the Ethereum network vulnerable to stealth mining attacks, since the hash rate would drop dramatically with reliance solely on GPUs. Changes arrive at a time when Ethereum prices are at a crossroads. As an asset, Ethereum is an integral part of multi-trading pairs, serving to ensure a dollar equivalence price for many assets. A crash in ETH prices could create panic across the markets and lead to a deepening of the pessimism of the bear market. Article finishes up by saying Ethereum's network was also facing problems of scalability and reneging on its promise of storing a complete and immutable history of the blockchain state. It becomes clear that running a complete and synchronized node is too cumbersome even for specialized node providers. So there you have it. I just wanted to throw that out there for you guys as a heads up. If they, and I think they're going to, it's not an if, it's more about when ProgPow comes through as an upgrade, do you think it's going to affect Ethereum's price in a positive manner or in a negative? I personally think negative. It's not going to be a good look. It may not happen right away, but I think over time you'll see less and less participation from miners on the network. In addition to that, we already know that they're moving away from proof of work to proof of stake, which again, to me, lowers the demand for the Ether token. So you guys let me know though. Again, fundamentally, I think Ethereum's heading lower. If you take a 1 year to 2 year time horizon, Ethereum is definitely heading lower in my opinion. But hey, I could be wrong. I want to give again a shout out to my man Joni Tiedemann for the song request today. I like this joint right here. Professor J, Niamini. It's your boy Crypto Blood. That's my 2 Satoshis for March 19th, 2019. I'm out of here, people. Holla!